Hi, everyone. Thank you very much for joining us. We're here talking about open banking and how open banking can benefit the world of credit, and is also disrupting the traditional model of credit and lending based on credit. So it's sponsored by Plaid. So thank you very much to Plaid, an open banking network, for providing their service and for supporting this series. And we're joined here by Anndy Lian, who's chairman of the BigONE Exchange, BigONE Crypto Exchange, and he's also chief digital advisor to Mongolia. So Anndy, thank you very much for joining us. Anndy has a wealth of expertise in both the crypto space and in the wider banking and technology spaces. So Anndy, thank you very much for joining us here.
Thank you for having me.
And so first question to ask you, because I mean, you're obviously very used to dealing with people both in the crypto space and in traditional technology. Could you just give an overview for us, just briefly, of what open banking is and how this is really bringing some disruption and some benefits to the traditional roles of things like lending and credit?
Sure, no problem. Let me start by saying what is open banking. I think in my take, open banking is more like a banking practice that allows a third-party financial service provider to access consumer banking and financial data via an application, maybe, or via API, for example. And then many would ask, what kind of benefits are there for open banking? I think maybe I break this down into three different parts. For financial provider, at the top of the chain, open banking will allow financial service provider to significantly innovate on their product offerings to the business. So this is more from the financial service provider's perspective. And then when we look at it from business perspective, such innovations made by the financial service provider will mean more effective and efficient financial tools in your business, more likely to be seen in the payment space. You will see a lot more automation, freeing up more time, doing away with a lot of manual tasks, and tasks saving money. And then last but not least, on the third part would be for the customer. I think open banking will mean there will be more ways to borrow, spend, and invest in money. So that's how I look at it. There's a lot of good opportunities behind open banking as well.
No, of course, thank you. And I think it's worth adding that there's a lot of people who for various reasons haven't been able to sort of really build up a credit score or borrow due to varying circumstances, maybe because they've just recently moved country, or refugees you hear about, or otherwise people who just for whatever reason haven't borrowed or haven't had to borrow much, or for example, those who've been paying rent for a long time, and you hear stories where people might have been paying high amounts of rent regularly, reliably every month, which means because they've been paying high amounts on rent, that they haven't been able to really save for a deposit and get a mortgage, for example. But they've actually, in some cases, been paying more rent than they would be if they were to get a mortgage, and have proven that they've been reliably paying this. And open banking brings some benefits to these people, because it's not just relying on their past, but it's also going into their bank and seeing what payments they have been making, and getting a perhaps more comprehensive overview than they would just based on credit score. Do you see that, and do you see any other benefits there?
I do see. Actually, this is what I call where the rules in the past, based on credit decision, has actually let many people down. And that is a space where the open banking guys can actually fill up the gaps, right? So I give you you brought up a good example about rent. That is very, very close to many people's heart, actually. But rent is one thing. Have you ever seen people having problems paying their first mortgage, in places where you live? I have friends who have a good salary, they they pay a high rent maybe for the last 10 years. They had little use of credit products. They do not even own a car and so forth. So maybe the only credit that they took on could be maybe a mobile phone plan, or maybe maybe a student loan of such. So traditional credit checking system will let my friend down,
Sure.
for instance, because they do not have access to sufficient data
Right.
to understand their financial situation. They have not taken out any financial products. This also means that they do not have enough information for any credit checking bureau to give them any form of maybe lending scheme, and they are not confident that they are able to repay. But then if you look at the open banking system, all right, it is powered by credit checking services, and the data that is needed, for example, like rent, you can see the rent payment maybe being serviced for 24 months already. You can see a constant salary input into their banking system. And all this consistency of incoming and outgoing, would then be a good model, to lend some confidence to the lender. And that's how the wonder of open banking is like, for a lot of young couples, a lot of young friends, that's how open banking can benefit them.
Sure. No, thank you. And going on to the crypto ecosystem, how specifically do you see this benefiting people who are, either looking to get in crypto, or who are already in the crypto space, because traditionally it hasn't been easy for people to on-ramp from fiat, and many banks have been anti-crypto, and you even hear of, you hear rumors of credit scores being affected because of association with crypto. And where do you see that on banking will impact people's either ability to get into crypto, or their association with it?
I think these are like three different questions. So maybe the first one that I will answer is is this. I think if you look at crypto projects, I'm not going to name who again.
Sure.
But a lot of them are trying to say they are helping the unbanked, to get a crypto account, get a crypto wallet, and so forth. That is actually not a difficult task. You could always give people free money, and then they can start off with a small bag of crypto, and then from there, if they are able to grow it, of course, the unbanked will become banked because they have a wallet that they can use, right? But on the flip side is that after you have that wallet, how are you going to spend it, right? I believe, maybe at places like where I am, in Singapore, your crypto wallet is not going to do too much, right? You can't pay BTCs to buy use a BTC to buy a cup of coffee at Starbucks,
Sure.
At least for the time.
Not yet.
Not yet. No, of course, there are some conversion schemes that allow you to do that, but typically it's not very worthwhile to do it. So I think that's one part of it, right? What crypto guys are trying to do all the time, the unbanked, the whatever, and so forth. Okay, I understand. I understand the story, but if you look at the crypto a lot deeper, you realize that there is a DeFi as well, right? So when there is DeFi, that is also an intermediate role for the financial services companies that we talk about, right? So DeFi can also help with the open banking. It's an added layer, to empower more people to use DeFi or blockchain, crypto, credit schemes or of such, right? So this is one thing. And then the last thing is you talk about traditional finance and crypto, and how crypto can affect someone's credit ratings. I do see that happening in US and some parts of Europe. But I don't think this is something that is going to happen or maybe going to affect people's credit score for the long time. Once the authority understands how the whole crypto regime is going to work, where they can reproduce the tax, portion, I think they will be very open, to all these crypto earnings and crypto investments that they make and credit to their own account, because if you understand the whole system, that is in the works right now, is that, whatever crypto earning that you can obtain, if you are going to convert it into a fiat, there will be tax. And if you're converting it into a fiat, you're actually putting it in the bank. Actually, the bank should be a lot happier, right? Versus everything is all crypto-based systems where they can't benefit from it at all, right? So I still think that open banking and DeFi are very closely related. DeFi helps to fill up some of the gaps in open banking, helps to facilitate some of these schemes of payment or lending schemes that are not really that feasible, in the credit world, so that's how I really see it.
No, thank you. Interesting you bring up DeFi, because many in the crypto space, and particularly in DeFi, are typically quite keen to get away from traditional banking, what they class as TradFi, or altogether, and some would want to exist completely in the crypto world. Have you seen large take up for sort of access and on-ramping via open banking to your exchange, for example, for those people who have already been in the crypto space? Can you talk about what the demand has been on that side?
I think when we talk about crypto space from an exchange perspective, our users are all KYC, right? So they are, we know who they are. They provide a certain level of verification, and they just trade using their crypto, right? So if you look at the other side of crypto, when we talk about DeFi, for example, I think the DeFi products are catching up. More people understood how DeFi work for them in the crypto space, but most of them cannot relate how DeFi is going to help them in the real life, right? Because you could borrow against your BTC, right, to get out more money, just that you can spend in the real life. But the thing is, right in the first place, do you have enough BTC to make the borrowings? Right. So that is one problem. And then the other problem is that those people who want to get into the DeFi system, they do not have a proper bank account, right? If they do not have a proper bank account, it's also very difficult for them to transact in crypto, because how then you obtain your cryptocurrency if you cannot get any fiat, right? You cannot get the fiat connection and buy crypto using your fiat money, right? Yeah. So I still think the real uplift, for crypto, open banking, DeFi, would be when you see more DeFi products being bridged into the traditional space. The DeFi world cannot just work within the DeFi space. Cannot work just within the crypto space. They have to first merge into the crypto, the traditional space. Know how to add in a crypto element into the traditional finance space. Get the traditional guys into the crypto space, vice versa. And then from there, the products will grow tremendously. And then when the products grow tremendously, there will be a time where there'll be two separate financial systems. One will be the traditional finance, maybe the CeFi, and then the other one will be the more DeFi, decentralized finance. So I think that's more of the future. But right now, as of now, it will be good for both to be mixed, and it will be good to have both CeFi and DeFi working closely together right now. And again, we need the open banking structure to help facilitate DeFi. So if not, how do you know whether you could actually rent or lend out the money to the person, right? So again, open banking kicks in.
Sure, no, thank you. And can you touch on some of the security benefits that open banking brings. I mean, it's fair to say that some of the traditional credit rating agencies have been subject to more than one hack, and obviously have controlled a lot of data, and as we say, have also limited who can access it. But are there any other security benefits that you would say that open banking brings for those, especially potentially for those in the crypto space?
I think it's not about open banking versus the credit facilities or credit banking. You know, when we talk about security, it is about how the data is being stored. You know, so if the data is being, if it's a centralized banking, credit banking, for example, and if the credit banking is stored on a centralized database where hackers can just go in, hack it, and then bring whatever things that they want, sell the data, you know, hack into different account and so forth. That is very easy because there's only one point of attack, you know, for the hackers. But if today, if you put your credit system onto a decentralized platform or onto a blockchain per se, right? Then the hacking will not be that easy, you know, and the hacking will not be that straightforward, you know. So my take from a security standpoint is where the data is being stored and how the data is being stored, right? So again, you know, some of these articles that I read before, you know, they will say things like open banking is more secure. But it's not true. You know, it depends on how you're going to store it, right? Your data. Yeah, that's how I see it, though.
Yeah, no, thank you. And I mean, just as a last question, thank you for your insights so far. What do you see as next for sort of open banking, in terms of sort of helping the credit and lending space, and especially regarding crypto platforms and crypto exchanges picking up this technology and using open banking?
I think, like I said, open banking and crypto and DeFi, they should work very closely together. I think using another way to look at it is, you know, what kind of opportunities do I see, you know, about open banking, for example. So in the lending business, for example, it should be the starting point and a major point for this open banking to first benefit everybody. And in my words, it will be probably the first benefit of such services as a whole, you know, for everybody. So that's a very first step, you know, for open banking. You know, they will bring in full-scale revolution in the art of determining where an individual is likely to be able to repay credit, you know, and allowing the sector to take a big leap from art to science, for example. And then for the credit modeling, you know, it is very data hungry, and the quality and recommendation analysis is available to the lender directly and correlated with the volume and the quality of data available. So if you look at both model, you know, what I do see is the middle ground. There will be a DeFi, maybe a DeFi player or DeFi layer, you know, to bridge both. Why do I say that? It's because DeFi being decentralized, the security portion is all being taken care of, right? Being on the blockchain also means that the quality of data available cannot be changed as and when they like, right? Because if today you're in a centralized system, today you can say you are a CEO, tomorrow you can say that you are a president, you know, you can change whenever you want. But if you do this on a DeFi network, verify on the blockchain, for example, based on your finance scoring, all these scores can then be tabulated, and it serves as a history, right? So if today you own $3,000 a month, you pay for ABCD, you know, then all these things serve as a record, and you can't change it because everything is on the blockchain. So the blockchain layer act as a bridge, and then the DeFi layer will act as a bridge for the open banking and credit bureau, you know. So it become more like I would still say more like a bridge, for both to work closely together, because it is not so straightforward sometimes, when we talk about credit decisions, right? It is also not so straightforward to say that the open banking data is sufficient, right? Maybe even the rental that you pay every month might not serve as a good variable or a good component, So maybe DeFi can come into the place, right? Then DeFi would say would give you an added advantage, to track how to track maybe your browser history, for example, how much just something off the cuff, right? So check your browsing history, what sites you serve, what things you have bought online, are you paying it using credit card? Or if you're not paying credit card, how often you buy it? Are you paying back all your loans, all your credit cards based on that, all these purchases online? I think DeFi can allow you to do a lot more innovative things, and that's not something open banking can really allow, users to use such variables to determine your loan, right? So maybe DeFi can be the middle ground where people can do all these innovations, and all the fun things. That's how I see it.
Yeah, no, exactly, and that is so true in the world of DeFi. There's so much happening and it's evolving so fast, but that saying you still need to on-ramp somehow for new users, and I can really see the appeal of open banking, especially for those newer users wanting to get into the space. And as you say, that there might be many more potential possibilities for it, such as the data from converting rent payments into mortgage payments without otherwise not having enough data. So Andy, thank you very much for joining us. Hugely grateful to you for sharing again your expertise and experience on this space. Look forward to speaking more soon, and massive thanks to Plaid for sponsoring and bringing to us this series on open banking and looking at how open banking works in the credit space. And especially for crypto companies. So huge thanks to Plaid, and again to Andy for joining us.
No problem. Thank you. Bye. Bye.